We're taking a look at the currency market with Shireen Darmalingham, Macroeconomic Strategist over at Standard Bank. Thanks, Shireen, for joining us this morning. Let's get straight into it because we had the rand end what was a tough and volatile week on a firmer footing against the dollar on Friday. Just how much reprieve do you see the rand running ahead with as we progress through this week?
Well, as you mentioned, we did see some reprieve coming through on Friday as the rand really takes its direction from international developments. We did see some positive data come out of the United States and also the euphoria surrounding the the EU summit, which really helped spur the risk on environment. So we did see that currency coming through slightly stronger. We do expect for today the rand to to trade in a very tight range of about 8 to about 8.20. But given the fact that there's a lot of developments coming out for the remainder of this week, we could see a wider trading range of about 7.95 to about 8.32.
Let's hone in on some of those developments because a lot of them emanating here in South Africa in terms of economic data, and we're anticipating inflation numbers. What are your expectations there? Because now we've got consensus seeming to be that we're heading on the CPI front at least 6.3%, so a breaking of that 3 to 6 target range.
Yes, Alishia, we are more or less in line with those consensus numbers. We're expecting inflation to come in at 6.2% year-on-year in November, from 6% in October. And really the main drivers of that will be exogenous factors, which is the higher petrol prices, the weaker currency, as well as the pass-through effect from higher commodity prices as well. So including the rising trend in administered prices, which are expected to continue impacting inflation. We're also expecting the PPI numbers to come in more or less in line with what we saw in the previous month at 10.6%. So generally a very higher trend numbers coming through for inflation. And that's really one of the main reasons why the Reserve Bank opted to keep interest rates unchanged at the last meeting. So they are very concerned about the fact that the latest GDP numbers came in softer than what was expected, and that they are aware of the fact that inflation could possibly run away in 2012.
Certainly it will be hard for the bank to raise rates in the face of that sluggish economic growth, especially where you've got the factors for inflation being factors outside of its control, as you highlighted earlier. Also considering the kind of labour market we're looking at locally, Shireen, we're anticipating labour data tomorrow as well. Run us through your expectations there.
Well, in the second quarter, we did see the employment number come in slightly higher at 7,000 jobs being created. But if you look at the quarterly labour force survey, we did see some fairly robust numbers come through in the third quarter. And the QES coming out tomorrow is going to be more or less in line with that. It's also going to show that possibly that we could see employment in the finance and real estate business services sector, as well as the wholesale and retail trade sectors. But what is concerning is the fact that we did see the mining and manufacturing sectors contract in the third quarters, and we could see those sectors possibly show a contraction of employment during the third quarter as well. So I don't think the labour market is going to show any kind of robust improvement, and we could still see some challenging times in 2012 for the labour market.
How much of an impact do you see this local data having on currency movement this week, Shireen, given that we've had up to now a lot of the offshore developments and developments in international markets having more so of a bearing?
Yes, it did have more so of a bearing. It has been attached to the international sentiment and has been drawing direction from that. But if we do see the local data come in a little bit weaker than expected, we could see some pressure come in on the currency, especially given the fact that the CPI data could come in slightly higher than expected, or rather than what we are expecting. So we could see the rand come under some kind of pressure this week.